Retail sales, industrial output, investment all slowed and missed estimates. Youth unemployment hitting a record high. Home sales falling more than 28% year over year. Joining us now is Stephen Roach. He's senior fellow at the Paul Tsai China Center at the Yale Law School. Stephen, it's great to see you again. And you are warning that this is a pretty severe slowing, right?
Well, Kelly, the government at the start of the year had announced a 5.5% growth target. And there's just no way they're going to come close to that. It'll be a miracle if they hit 4. And, the Chinese economy's been on a slower trajectory now for a number of years, post-2011. If my memory is right, I think the number is around 7%. So, it could be falling to about half of that post-2011 trend. And, that's worrisome, especially with this very important policy meeting at the end of the year with pressures in Taiwan and these ongoing repercussions of this ridiculous zero COVID policy that the government continues to insist upon. So, yeah, this is not great.
What's your best guess as to what the next 6 months look like?
Well, I think, it's going to be maybe a little bit better just because you might hope that some of these lockdowns will subside. They seem to be easing off some of the restrictions, but certainly not all of them. But they remain committed to deleveraging in the property sector, which is probably a good thing considering the excesses of recent years. But there is a downside coming from what is likely to be a sharp slowing of global trade, which hasn't hit yet, but with central banks around the world tightening to address inflation, that is inevitable. So, the economy is sort of moving sideways at a low growth rate for China, which is unsatisfactory given the point you just made on high youth unemployment.
There is a glimmer, sort of bright spot here for the globe, which is if that takes the boil off of their energy demand, we could desperately need those oil barrels and all the rest of it, sort of reallocated elsewhere right now. I don't know if we're talking about that severe of a slowdown, but, maybe the oil market is one of the few places where we can get kind of a clean read on what people think in real time about their growth prospects. And it's been down.
Well, it's possible, but, the Chinese economy never came back and with the vigor that we thought it would. So the oil markets have done their own thing, even in the face of this ongoing sluggishness of China. Obviously, if China were to bounce back very, very sharply, that would be a different matter for global oil prices. But that seems unlikely to be the case.
Is there anything they can do? I mean, what is Xi Jinping's goal right now? Because even while we've known for years about property sector problems, he's still going after the tech giants. That's the one obvious growth spot in the country. I don't know if there's any sign. Sometimes, people come on and say, well, he's lessening up. We're reaching the end of that now, perhaps. What kind of growth is he trying to engineer, if any, right now?
Well, he'd obviously like stronger growth, especially heading into this 20th Party Congress in most likely November, which, he is widely thought, and I would agree with this, to be reappointed for an unprecedented fifth-year term. But he wants to do it on his terms and not on a defensive terms. And, with growth weak, that's a risk. And look, he's unwilling, as most autocrats are, to back off from his headline policies that you correctly pointed out of deleveraging the property sector, regulatory crackdown on internet platform companies. And there are things beyond his control, like, the coming slowdown of global trade. So he's not about to change his basic philosophy toward more ideology, tighter discipline and control over the more dynamic pieces of the Chinese economy. And so growth is going to be difficult. Add to that the demographic headwinds, which he has no control over. And, there's a lot of challenge that a leader angling for his third term is going to be faced with.
Sort of put it bluntly, would you invest in the Chinese stock market right now? Or what would you say to those who are interested in poking around in either specific companies and sectors or just the whole thing?
I think you got to be more granular than that. I know it's popular with some outside observers to say China is not investable, but there's a lot of aspects of the Chinese economy that still present opportunities, like infrastructure, like healthcare services, like some segments of e-commerce. But nevertheless, some of the open-ended opportunities that were once presenting itself with these internet platform and dynamic entrepreneurial-driven tech sectors, those are certainly worrisome going forward, and it's correct to be cautious about them.
Quick final question. If their growth keeps slowing this way, what other rabbits can he pull out of the hat? What other policy moves should we expect?
Well, I think the playbook is pretty, well defined. When push comes to shove, Kelly, they just do infrastructure and more infrastructure, and they still have a rural urban migration trend that supports further movement from the countryside to the city, which will require more infrastructure. But even that has its limits ultimately, and but I don't think those limits are now at hand.
All right, Stephen Roach, good to have you today. Thanks for your time. We appreciate it.
Thank you, Kelly.